I do agree with that assessment. If you really put a microscope of what's going on in the short term, in the immediate aftermath of Fed decisions, and this goes back to December 2015 when the Fed began this rate tightening cycle. You look at how the S&P has behaved in the 1 month following a rate hike. There's been 7 rate hikes, 57% of the time, which is low relative to the pauses. The market was higher. So we've been anywhere from flat to negative in that 1 month, and that's in the immediate aftermath of a Fed rate hike. However, when the Fed pauses, as it's expected to do on Wednesday, investors seem to applaud. The chance of the market moving higher over the next month moves up to 76%, and the returns is anywhere from 1.5 to 1.75% over the next month. So, I would, based on how the market has behaved in the immediate aftermath of these Fed actions going back to December 15, I would agree with that assessment. So come Wednesday, for example, I'd say there's a lot of risk in this market if the Fed does surprise investors and hikes rates. Right now, there's a 98% probability that it holds.
Bob, I was very surprised to see just the whisper, the suggestion that the idea that the Bank of Japan might become less easy had such a massive ripple effect to the United States, the U.S. credit market, and then eventually the stock market. It suggests that indeed the biggest risk out there to markets is these central banks around the world becoming less easy.
I think that's true. While the Fed has been raising rates for 2.5 years, you still have negative deposit rates in Europe and Japan. And Japan is the big one because that's where a lot of capital resides. A lot of that capital got exported out of the Japanese bond market into the U.S. bond market. So if they start to unanchor the long end of the curve, then suddenly Japanese government bonds look a bit more attractive.
So a direct line from Japanese government bonds to U.S. stocks here, and overall impact.
Absolutely. I don't know that the BOJ cares. I think they're particularly more interested in what happens to the Japanese banks.